Boss Resources has made a number of key announcements recently, which has continued to advance their Honeymoon uranium project closer to a potential restart in the future. This analysis reviews these key announcements as well as their respective effect on our valuation, as well as provide a brief update on the current state of the uranium market. Boss recently announced they have increased their ownership in the Honeymoon project to 100% as they acquired the 20% minority interest for 300 million shares. And whilst this had no effect on our valuation, as the increase in the project ownership was countered by increased future dilution, there are numerous qualitative benefits of having complete control of a project, especially one such as Honeymoon as it moves closer towards production. These benefits include better use of management's time as they no longer have to deal with a joint venture partner, as well as simplified negotiations with potential project financiers, governments and other key stakeholders, as well as negotiations with potential offtake partners. In addition to the consolidation of the project's ownership, they have also announced a successful field leach trial program. The field leach trials were essential as Boss plans to use ion exchange as part of their expanded processing facility, compared to solvent extraction, which was previously used. Ion exchange uses the same principles as solvent extraction, however uses small resin beads to load the uranium instead of organic solvent. We discussed these results with the company in further detail.
They were important for the primary reason of technical validation to prove that we could operate our wellfield effectively and extract the right amount of uranium tenor and applying the newly identified resin that ANSTO have sourced for the Honeymoon project to cope with its resource. It's been an absolute standout success, far surpassing any expectations. We've hit historic highs of up to 337 milligram per litre, never achieved before. Our modelling on the solvent exchange plant was on the basis in the scoping study and pre-feasibility study of 47 milligram per litre. We're in excess of double that. It's fantastic. We expect to enhance our processing efficiency, and the result of that should be a saving in costs on operation and capex.
Given the results to date, it is probable there could be a further reduction in operating costs in the future. We look forward to the release of the DFS during 2018. And finally, it appears the uranium price may have finally bottomed out, as it recently jumped from decade-long lows. This increase in price was a direct response to two of the world's major producers announcing production cuts, with further cuts to come during 2018. We particularly note the announced cuts from Kazatomprom, as they are also one of the world's lowest cost producers, therefore highlighting that current low uranium prices are not sustainable for any producer. And whilst we believe the uranium price still has some way to go before companies such as Boss would consider commencing production, history has shown the uranium price can move very quickly. And given Boss is the most advanced of the Australian-based developers, whilst also having the shortest time frame to production given the infrastructure and approvals which are already in place, we believe Boss offers excellent leverage for investors as the uranium price moves higher in the future.